We will tell you the 8 investments you should make now to get rich. The last investment is my favorite, so watch this video till there. Now let's start. Number 1. Share market. The stock market has long been recognized as a favored option for investors seeking growth opportunities. Historically, it has yielded substantial returns, particularly for individuals who allocate their investments across a diversified portfolio of stocks. The S&P 500, serving as a key indicator for the U.S. stock market, has historically delivered an average annual return of approximately 10% over the last 100 years. It is important to recognize that the market can exhibit considerable volatility, with short-term fluctuations potentially being quite pronounced. After this election, various sectors are projected to demonstrate strong performance. In general, the technology sector remains a significant force, propelled by innovations in artificial intelligence, machine learning, and the widespread adoption of 5G technology. Leading companies such as Apple, Microsoft, and NVIDIA are driving these innovations forward. Number 2. Real estate investment. Real estate continues to be a fundamental component of numerous investment portfolios, thanks to its reliable income and potential for appreciation. There are multiple avenues to consider when it comes to investing in real estate, including residential properties. Engaging in residential real estate entails acquiring properties such as homes, apartments, or condos with the intention of renting them out or selling them for a financial gain. This investment option has the potential to generate steady rental income while also appreciating in value over the long term. Investing in commercial properties encompasses various types of real estate, such as office buildings, retail spaces, and industrial facilities. These investment opportunities present the potential for elevated rental yields. However, they may necessitate a greater initial capital outlay and a higher level of management proficiency. Real estate investment trusts, REITs, provide an opportunity to invest in real estate markets without the need to manage physical properties directly. These publicly traded companies are engaged in the ownership and management of income-generating real estate, providing dividends to their shareholders as a return on investment. Subscribe to our channel and also press the like button to know more investments that could make you rich. Number 3. Sustainable energy investment. Investing in renewable energy has become increasingly popular as the global landscape moves towards more sustainable energy solutions. This sector encompasses investments in solar, wind, hydroelectric, and geothermal energy sources. Organizations engaged in the production, technology, and infrastructure of renewable energy are leading the way in this significant transformation. Investing in renewable energy presents a significant opportunity for strong returns, particularly as the global appetite for clean energy continues to grow. Governments around the globe are enacting policies and incentives aimed at fostering renewable energy, thereby facilitating growth in this sector. While investing in renewable energy presents opportunities, it is important to be aware of the associated risks, including technological uncertainties, potential regulatory changes, and competition from established energy sources. Number 4. Fixed income securities. Bonds represent a well-regarded fixed income investment option, offering consistent interest payments along with the return of principal upon maturity. There exists a range of bond types, such as government bonds. These bonds, issued by national governments, are regarded as low-risk investment options. Consider options such as U.S. Treasury bonds and municipal bonds. Corporate bonds. Companies issue these bonds to raise capital, and while they generally provide higher yields compared to government bonds, they also carry a greater level of risk. Municipal bonds. These are issued by state and local governments and frequently offer tax-exempt interest income, which can be appealing to specific investors. Bonds provide a reliable source of income and typically exhibit lower volatility compared to stocks. These instruments are frequently utilized to enhance portfolio diversification and mitigate overall risk exposure. It is important to note that bonds carry certain risks, including interest rate risk, which can lead to a decrease in value when interest rates rise, and credit risk, where there is a possibility that the issuer may default on payments. Number 5. Mutual funds and ETF. Mutual funds and exchange-traded funds, ETFs, serve as collective investment options that enable individuals to acquire a well-diversified array of assets. Mutual funds involve active management strategies, whereas ETFs generally follow an index and are managed passively. Mutual funds and ETFs both provide opportunities for diversification, access to professional management, and a level of liquidity that can be beneficial for investors. This option presents a strong opportunity for those looking to diversify their portfolio across a wide array of assets without the need to pick individual stocks or bonds. It is important to consider that these options often involve management fees, and there are instances where actively managed mutual funds may exceed their benchmarks. Number 6. Valuable metals. For centuries, precious metals such as gold, silver, platinum, and palladium have served as a reliable store of value. These assets are viewed as a safeguard during times of inflation and economic instability. Investing in precious metals can enhance your portfolio's diversification and serve as a safeguard against inflationary pressures. These investments tend to demonstrate strong performance during times of economic decline and elevated inflation rates. Nonetheless, these assets do not produce income in the same way that stocks or bonds do, and they can exhibit volatility over shorter time frames. Investors are likely to gravitate towards precious metals as a means of securing stability in the face of economic uncertainty. Gold continues to be a favored option for protecting against inflation and variations in currency values. Allocating resources to physical metals, exchange-traded funds, or mining stocks can enhance your portfolio's exposure to this asset class. Number 7. Real estate investment trusts, REITs. Real estate investment trusts, REITs, are entities that specialize in owning and managing properties that generate income. These assets are available on prominent exchanges similar to stocks, offering investors an opportunity to engage with real estate markets without the need to possess physical properties. Real estate investment trusts provide investors with liquidity, consistent dividend income, and the opportunity for capital growth. These investments offer a range of options within the real estate market and serve as a potential safeguard against inflationary pressures. It is important to note that REITs carry market risk and may be influenced by fluctuations in interest rates and the overall conditions of the real estate market. It is anticipated that REITs concentrating on sectors such as healthcare, industrial, and residential properties will demonstrate strong performance. The current transition to e-commerce, coupled with the rising need for data centers and logistics facilities, is expected to create favorable conditions for industrial REITs. Residential REITs located in high-demand areas are likely to experience growth opportunities. Number 8. Commodities. Commodities encompass essential natural resources such as oil, gas, metals, and agricultural products. Allocating resources to commodities can enhance your portfolio's diversification and serve as a protective measure against inflationary pressures. Investing in commodities has the potential to yield substantial returns, particularly in times of heightened demand or when supply shortages occur. They can serve as a protective measure against inflation and the devaluation of currency. Commodity prices often experience significant fluctuations shaped by geopolitical developments, climatic factors, and overarching economic trends worldwide. Now, watch the video appearing on the right side to know the habits of the millionaires you could adopt too, so that you get rich. These habits can make anyone rich. Also, subscribe to our channel to know more amazing financial tips and secrets to get rich.